everybody, this is Lisa Harper, and you're listening to the Not Ready Yet Curating Conversations for the Aging Journey podcast. This is the show that is going to change how conversations we have with our loved ones about aging and life decisions. Today we're talking with Michael Pankow, a seasoned mortgage executive with over 20 years of experience. He is the CEO of Veterans Mortgage of America and president of its reverse mortgage division. He brings a proven track record in sales, operations, and leadership. He's also a U.S. Army veteran with 12 years of service. Michael is an entrepreneur with ventures in aviation and film. There's so many things I think that we could talk about here today. He is licensed in 50 states and holds his Certified Senior Advisor, his CSA, and his CAPS certification, which is Aging in Place Specialist. And through all of these things demonstrate his commitment to serving veterans, seniors, and their families. So I want to just inform people listening that we did record a part one of reverse mortgages with Michael. This is going to be a deeper dive into some scenarios that your family may be experiencing. So, Michael, I thank you for joining us again, but I think it's so necessary because I was thinking I'm in the industry, technically, not on the mortgage side, but enough to be privy. And you have opened my eyes to so many things about reverse mortgages. So I just want to thank you again for coming back for this one, because I think this is going to be how people can really see how it could be applied in their lives with their families. So thank you again. And I know you are joining us from California. So I just want to say, my heart is our state was devastated by Hurricane Helene here in North Carolina and is still in areas devastated. And so my heart just goes out to you guys out there.
Yeah, you know what, thank you. I'm actually going to be driving through some of the affected areas, but you're absolutely right. So if you have a reverse mortgage and you've been affected by the fires, whether your house has been partially damaged and in some cases, God forbid, your house is burnt to the ground. And, I'm such a proponent for seniors, and I'm such a proponent for the sustainability of reverse mortgages and the consumer protections in place. If you have a line of credit associated with your reverse mortgage, which many seniors do, not all, but some do, that line of credit is still intact. So when you've lost your home, you need those emergency funds, your line of credit with the reverse mortgage, because of the consumer protections in place, is still intact. So you can get access to those funds, which I can't think of another loan product that allows you to do that, right? So it's a phenomenal product, the reverse mortgage.
That is amazing. Yeah, I mean, there isn't much that I know about there that has that kind of safeguard in place.
Just to catch up a listener, if they didn't catch part one, just real quick, the eligibility for the reverse mortgages, you got to be 62 and above. It has to be your owner-occupied residence, can't be a rental home, can't be a second home. You can rent a room out in your home, but it has to be your owner-occupied residence. You have to go through FHA counseling, and you have to pass a financial assessment. Those are the minimum qualifiers for a reverse mortgage. I just want to get your listeners up to speed on that if they didn't catch part one, but I recommend they go back and catch up on part one about reverse mortgages so they can really understand it. But yeah, so that's the minimum qualifier. 62, owner-occupied, must get through FHA counseling, and also must pass the financial assessment.
Okay, perfect. Yes, eligibility is important. And so for those that are looking to downsize, what are options for a reverse mortgage if somebody's in that scenario, that they're realizing that they just need to get into a space that fits better for their life at this time?
Yeah, so let's put some names to it. So let's call them Bob and Kelly. Bob and Kelly have lived in their home for a very long time. They're 72 years of age and 75, so 72 and 75. And, the kids are out of the house, they're empty nesters, maybe the house is a two-story, right? And they don't ever really go upstairs anymore because it just doesn't work for them physically. So they're thinking about downsizing. But so many times in our industry, we hear seniors say, well, I'm going to sell my house, I'm going to take the proceeds or the equity from the home, and I'm going to buy a home all cash so that I don't have a mortgage payment and I own the home free and clear. Nothing wrong with that. Nothing wrong with that. But with the scenario that I'm going to share with you guys today is we take Bob and Kelly, and they had a home they've lived in for 25 years. They only owed $65,000 on the current mortgage, so they had a lot of equity. The home was worth $650,000 when they sold it. So they had $600,000 in equity that they could play with. So at the end of the day, when between taxes and paying commissions and fees, the number that they had on the net sheet, right, when they got done with the sale was $585,000. They walked away with 585 after they sold the house for 650. Well, if they wanted to take that 585,000 and they wanted to pay cash for a house, and they only wanted to use that 585, they'd have to go find a house for 585,000 or less, right? That's just the math. If they're going to spend all cash and they're not going to dip into any of their assets, 585, that's the house they can go buy or less, okay? But here's the great news, is that with a reverse mortgage for purchase, you have the ability to leverage your money and to buy substantially up. Meaning you can change the neighborhood, the community, the size of the house, right? You can buy up, meaning you're not going to buy a house for 585,000. In this scenario, using their age, using the available assets, they could actually go out and buy a property. For Bob and Kelly, they could look at homes that are 750,000, and guess what? They're not going to spend 585,000. They're only going to have to spend $435,000 to buy a $750,000 house. They save about $150,000, right, of that cash from the proceeds of their sale. That cash is like gold, because they can now use that money, put it away, and they can use that for aging in place, right, to make maybe home modifications later on. They can use it for medical emergencies. My mom and dad have both had medical emergencies in the last year. They have a reverse mortgage. They have a $300,000 line of credit. Now, with a reverse mortgage for purchase, you don't have a line of credit, but you don't use all of your cash in this scenario. You're able to buy a much nicer home, maybe a much better area, bigger home, right? Maybe it's got some of the universal design features that you're looking for that allows you to age in place, but you keep a larger portion of your cash from the sale of your home. But you buy up, which is really great, right? Right? And you couldn't do that with just using cash.
You're telling me that I can take those proceeds, not technically use all of them, still have some on hand for this flexibility of maybe future care or future modifications or what have you, or not use it, but you still have that little buffer of when needed money, but you're also increasing your purchase price on the current property instead of just flipping that 585 into another property and not having a mortgage, but then not having anything available for funds. Is this available in all 50 states? And okay,
yes,
not
all 50
regional
states.
or anything like that. Okay.
Nope. And that's the great, because it's an FHA-based program, right? So everything, all the rules and all the regulations that apply in my community apply in your community, right? So that's the great news. So again, with this scenario, Bob and Kelly were able to take their $585,000, save $150,000 of it, put down $435,000 out of the $585,000, buy a home for $750,000. They're on title. They never have a mortgage payment. All that they're responsible for once they buy that house for $750,000 is the taxes, the insurance, and if there's an HOA. As long as they maintain the home, they remain in the home as a primary residence, and they pay the tax and the insurance and the HOA if there's an HOA, they can live in that house in perpetuity without ever having to make a payment. So it's the same thing as spending cash, except in this scenario, they bought up and they retained $150,000 of the $585,000 they got from the sale of their previous property. Okay. That's a win. That's a win.
Yeah, it's
right.
It's got multiple gifts like really when you unpack it to have that flexibility.
Yeah, I think the concept and the high level takeaway from the reverse mortgage for purchase, it allows the senior to buy up and not always use all the cash that they thought they needed to use to own a property, never have a mortgage payment again, be on title, buy a much nicer home, and spend less money.
Okay. Any place you're moving may also need some modifications in the future to age in place, we say safely, and something you can sustain. And so for those that want to look at a reverse mortgage to maybe make adaptations to the current home, what does that look like?
Yeah, so, again, the aging in place, 78 to 90%, depending on which stat you read and who puts out the stat, of all seniors want to remain in their home and age in place. My mom and dad are great examples of that. My dad's 88, mom's 78, and again, both have had medical issues, and they have a reverse mortgage, right? They both took falls within the last year and a half, and thank God we had the reverse mortgage. So what does a reverse mortgage do for somebody who wants to age in place, but necessarily doesn't have the funds to make the modifications that you and I both know as being CAP certified are so important? So with a reverse mortgage, if the math works out, meaning your age, the value of the property, and maybe what debt you have on it, because you can get a reverse mortgage and have mortgage debt on your property, right? The reverse mortgage is going to pay it off. It's just how much mortgage debt do you have, right? So most seniors who want to age in place and have that conversation are generally in their 70s, right? Even though you and I both know you want to push that conversation into the 50s, right? You want to back it down,
yeah.
Have people start thinking about that.
And for those listening, as far as it's the definition, aging in place in the home starts at age 40.
It does, yeah, with universal design.
There's another statistic for people that I'm sure they're like, what? If we can create a more proactive society, I am all for it for aging, 100%.
100%. So if you qualify for a reverse mortgage and all the math makes sense and you get a line of credit out of it, you can use that line of credit. Again, it's not like a home equity line of credit where you have to make a payment on it. With a reverse mortgage line of credit, you never have to make a payment on it. You can use the funds if you want to or not, but when you use the funds, you're not responsible to make a payment. So what can those funds be used for when we're talking about making home modifications? Virtually anything. So that's installing grab bars. That's installing a ramp to the front of the house to allow you to get in because you had steps coming into the house. New lighting, new pulls on your cabinetry, right? Widening the doors if you needed to accommodate a wheelchair or a walker. Zero threshold showers. Modifying the bathroom is a big thing you and I both know. Is modifying the bathroom is probably the #1 home modification that needs to occur, right? To accommodate a senior who's in a walker or in a wheelchair. So there's so many things that a reverse mortgage can be used for that allows the senior not to dip into their assets, right? Their 401k, their pension, some of the other things that they may have coming in, their Social Security, or if they don't have any of those, yet their house. We've heard the term house rich but cash poor, right? Well, the reverse mortgage flips that on its head, right? It allows you to dip into the equity of your property tax-free without ever having to make a payment on it. Anytime you pull cash out of your property, whether it's a traditional cash out refi or you get a reverse mortgage and you use the line of credit, that equity is never taxed. It's never taxed when you're pulling it out via a loan. So you can use those funds tax-free to make those home modifications to allow you as a senior to remain in your home as long as possible, securely, safely. So it's a sustainable product. And again, you can live in that home technically until 150 years of age, and then they'll redo the reverse mortgage for you. But no one's gotten that far, so there's no issue with running out of time and, oh my God, if I'm 90, are they going to take the home from me? No, you're on title. It's your home. You're just responsible for the taxes and the insurance. But that line of credit, if you qualify for a line of credit, which means you just have enough equity and you meet the right age requirements of being 62 and above, right? If you can get the line of credit, you can use that line of credit to make those home modifications to age in place.
That's amazing.
And they're not going to put any restrictions on that. You can use it for whatever modifications you want.
Could be life-changing for people wanting to stay home. So that's amazing because those things do cost money, and so many families that all their available funds that they do have are not available. It's in the house. It's in the home. Mm-hmm. They did the American dream and stayed there. It's their savings bank.
Right.
But it's like it's almost like a locked savings bank.
Yeah, it's not liquid.
Right. So this is again, this is why we're here. I want people to know that these options exist. Is there anything else you want to share about the aging in place?
Well, again, going back to my mom and dad, who both had medical emergencies in the last year and a half, and they're both now in walkers. I never thought I'd have both my mom and dad in walkers, and my mom broke her femur of her left leg. And so she's home now about 3 weeks, but still very immobile. But because they have the reverse mortgage, and they have the line of credit. Now, they own their home free and clear. That was the home I grew up in, so they lived in it for 50-ish years. They own the home free and clear. They didn't have a mortgage payment, but they couldn't tap that. They were house rich. It was $750,000 value home, but they were cash poor, meaning they couldn't dip into it. And so with that reverse mortgage, we got that done for my mom earlier last year. That was a $300,000 line of credit.
Wow.
And she can use it, not use it, but she did use it. So they fixed the shower, they got the zero threshold, they did a few other modifications, they fixed the roof. They did some things that made the house a little bit more comfortable. Secretly, I wish my mom would do more because I know that there's more that can be done. But she's being frugal, and that's fine. But again, that reverse mortgage allowed all of that to happen.
And so, can they use it for care? Are they needing care? Like,
use it for anything.
Are people coming in
that
to
is
home
just
to
like
help with rehab and therapy?
Anything.
Okay.
Anything. That is your money. There's no restrictions on what you use the funds for.
Okay.
None whatsoever. No one calls you and says, "Hey, what did you use that money for again, Lisa?" No. You just call the servicer. You say, "Hey, I'd like to get $5,000 out of my line of credit," if that's what you had available, right? My mom does. And they say, okay, within 5 business days, she's got the money.
And this may be a silly question, but, in the insurance world, a pre-existing condition, and I'm not an insurance person, so we're not going to go into that, but people think, oh gosh, what if mom falls and then we need this? Like, can we do that? Can mom fall
Yeah.
and we apply for a reverse mortgage?
Yeah. 100%. Yeah. The only thing that's going to slow you down with the reverse mortgage is if we have cognitive decline. If we have somebody that has dementia, and let's say they're single, they don't have a spouse. Like my dad he's probably he's in the moderate stages of Alzheimer's, okay? Or at least dementia for sure. My mom's got a POA, okay? So that POA allowed my mom to make sure that the reverse mortgage happened. Now, if my mom had the POA and after she took the fall wouldn't make any difference because my mom has the cognitive ability to understand what's going on with a reverse mortgage. So it's really more about the cognitive, it's not about the physical.
Okay, or the timing. Okay, yeah. All right. It's more the cognitive ability. Okay. And for those listening, POA is power of attorney, just in case that's something new that you're hearing, which is a whole other topic. There'll be episodes on that.
Right.
So, get your directives, get your advanced directives in place, people. So that's huge too. And I just thought I'd throw that out there as you were going through that scenario.
Yeah.
Okay, well, goodness. So it's definitely been, you're in the industry and your parents are really benefiting from your knowledge and profession and your ability to navigate them in that time. I think that's amazing too. I'll just say that on that note. Yeah.
Yeah.
So
thank you.
Yeah, absolutely.
Thank you. Yeah, it was. Yeah, had I not been in the industry because of some of this, the context of how my mom, where the house had deteriorated, my mom not understanding a lot about the POA, even though she had one, and me having to talk to the doctor to make sure we got the right diagnosis from my father, right? It did help me being in the industry. And so what I'll say about that is that my mom was a classic case of, had she waited another year, right, may not have happened because, the house would have been in further disrepair. If she took the fall, right, how much harder would it be for my mom? Not that she wouldn't qualify, but in terms of just making it happen, right? Making it all happen. She's distracted right now with physical therapy and pain and all of that. So when you layer that in, so what I say about, there is a myth, and we covered it in the last podcast, there's a myth about reverse mortgages. It's a loan for the desperate, right? It's a loan of last resort. And what I'll say is that if you wait too long, then maybe it was your last resort, or maybe you are desperate, right? So if you're thinking about a reverse mortgage and you've got your cognitive, there's no cognitive decline, your house isn't in disrepair or deteriorated, now's the time to get the reverse mortgage so that you can sustain all those things, right? It's an insurance policy. It's flat out, it's an insurance policy. When you have that line of credit or you're improving your monthly cash flow because you don't have a mortgage payment, it's an insurance policy, which no one can ever come in and take that house from you as long as you pay your taxes, your insurance, and your HOA.
Yeah. And in some cases, people are at that place of, they've had the house, they've been able to maintain the mortgage, or maybe there's not a mortgage, and they're like, I'm living free and clear. And it's like, no, not really, because you do have, the maintenance in a home. And, some of these price tags on roofs and AC units. I mean, we're in North Carolina, and the AC in the summer. I'm always like, I grew up in
Yep.
upstate New York, and we didn't even have that. We didn't even have window units. But now I'm just like, oh my gosh, like
Right.
a day without AC in July, things like that. When they start breaking, they start just
Hmm.
accepting it and living in it and going, okay, I just have to
Right.
modify how I live, because they don't have.
Right.
They think that there's this big, you know, price tag of $15,000, that they don't have those funds. But it's like, I'm
Right.
like, hear this, families that out here that are like, wow, this is eye opening. Like, you have that available in the equity you have, tax free, to take care of the
Right.
home too, right?
Right.
Okay, so we've gone over downsizing, the reverse mortgage for purchase, the aging in place modifications, and bringing
Hmm.
health care in should you need or whatever. And so I think the
Right.
third scenario we're going to present is interesting. So tell us about sisters or brothers or, friends coming together that could
Yep.
pool in and purchase. How does that work?
Yeah, so just like the reverse mortgage for purchase scenario, right? As long as everybody's over the age of 62, and again, when we're doing the math for a reverse mortgage, it's always based on the age of the youngest borrower, right? So as long as everybody's 62 and above and it's their owner-occupied residence, seniors can come together whether they're siblings, family, or they are not related to each other, but they can all apply to get a reverse mortgage on the same property. So it's a great opportunity for seniors who may not qualify because they don't have the necessary funds to make the down payment to get the reverse mortgage for purchase if they're downsizing. But guess what? If you're in your late 70s, early 80s, you may have a friend or two who is tired of living alone, right? And individually, the two of you can't provide or can't pay for somebody to come in and provide you with some care. However, if you were to pool your funds, do a reverse mortgage for purchase like we did with Bob and Kelly, you're able to buy up a little bit, right? Buy up. You can combine your resources. Each of you could, let's say for example, there's three seniors, and those three seniors all above the age of 62, and they pool their funds, and they're able to go out and buy a house that's $650,000. It's a 4-bedroom home, nice home, and in that fourth bedroom, out of the three, they live in the three, but in that fourth bedroom, the option for them is they could put a part-time care provider, in-home care provider, in that fourth bedroom that could come in and stay 2 or 3 days a week to provide cooking and cleaning services and bathing and things like that, that maybe one or two or all of them actually need, right? We don't know what level of care in this scenario they need, but, or they just buy that house with 4 bedrooms knowing that they're going to have somebody in 5 or 6 years come in and live there. But again, it's the exact same thing as a reverse mortgage for purchase. It's exactly what it is. It's just we take siblings or we take a group of seniors, 2 or 3, and they pool their funds and they qualify, right? They have to go through the same process of the counseling and the financial assessment, but when they're pooling their funds, they have a better chance of doing that, right? And maybe they're downsizing, right? Maybe there's two seniors say, look, I've got this house. It's I'm widowed, right? My husband has passed and her husband passed, and we've got these houses that are 2,500 square feet and we never go in bedrooms. Let's find something that's in a senior community that's smaller, but it's nicer, and it's got some aging in place concepts built into it with universal design, right? And let's buy a 3 bedroom and let's put a care provider in there in the next 2, 3 years and have them come in 2, 3 days a week. But what a great way for seniors to have that communal living aspect, right? That compound, right? People joke about having a compound a lot, but bring that concept to the table where you bring multiple people together that are all over the age of 62. They pool their funds and they buy a home with the intention of aging in place, and then using a spare bedroom to either rent it out to generate additional income, because they can do that. They can rent out a bedroom, or save that bedroom for somebody who's going to come in and in the future or immediately provide them with some level of care, but that person has a place to stay,
Yeah, I mean,
right?
and all the while, building equity for the future too, where I know some seniors
Yeah.
go into more rental situation at a certain point, and and then they're not building any more equity, what have you. So this is what everybody says: we don't want to be a burden to our son and daughter-in-law, as the kids
Right.
move away, they chose to move near other friends and didn't want to be a burden, because we hear that all the time. Don't want to be a burden
Right. Yeah.
to the sandwich generation, to my kids that already have their kids, and everybody's going in a
Yep.
million different directions, and nobody works a 9 to 5 anymore. It is all, everybody's on all the time. And I love your, can I call it the Golden Girls scenario?
Actually, I like that. You know what? That would be great. I love it. Or the golden girls, golden guys, whatever, right?
So is there anything else you want to add on that one, or?
Well, yeah, the opposite of that, you mentioned renting. So with renting, you can get in, depends on what area of the country you're in. But at the end of the day, when you're renting, and what that means is that you're under the whim of the landlord. So if they want to raise the rent, they can raise the rent. If they want to evict you, they can evict you. If they want to sell the property and you have to leave, they can sell the property and you have to leave. So you're always living with that outside of your lease agreement, right? You're always living with probably a 60-day notice of that, hey, you may have to vacate this property because we're going to sell it. We want to get a new tenant, and here's your 60-day notice, right? So now what do
Oh
you do?
gosh.
So with the reverse mortgage for purchase, with groups of seniors, the Golden Girls, the 2 or 3 coming together and pooling their funds, they own the home. They're all 3 on title. No one can ever take it from them. All they have to pay is their taxes, insurance, and their HOA, which they have to pay anyway if they own a home, right? And they can buy up. They can have that communal living environment where they're sharing the cooking and the camaraderie and all the stuff they do, all the activities. And then if they buy the right house, they set it up so that they can have somebody come in and provide them with some care, but that person's got a place to stay. So now they've got a bargaining chip, right? Well, if you come in and you live here full time, we're going to pay you half of what we normally pay you hourly because you're going to get a place to live, right? So that works for some people. Maybe that's a young college student who's certified to do all that work and qualified, but they go to school at night and they come in and they take care of them during the day, and then they've got their routine. But it just creates flexibility and options that if you rent, you don't necessarily have that.
No. Senior communities historically just hike the rent after the first year. I just think my heart is like, to put that stress on the senior to increase, when most have a fixed income at that point, to increase their amount, and then, if you can't do it, you got to move. And moving is so stressful at any age. I just hate that. So that
Right.
last little scenario, you just made my heart just turn. But
Right.
yeah. So I guess so we've drawn out a few scenarios that are, I think very eye-opening for sure as options for people. There's being widowed, and then there's also people that are unfortunately going through a divorce at that time too. And it
Mm-hmm.
does exist. And so what can you share for those that might be going through divorce later in life?
Yeah, well, because people are living longer, the what they call the silver divorce or the gray divorce is actually the largest segment of people getting divorced right now today,
Wow.
right? Because they've raised their kids, the kids are out of the house, they've got through that part of their chapter of their life, and now they're like, okay, you know what, we've changed, and so it's just a stat, is that the gray silver divorce is one of the largest segments of our population getting a divorce right now. And so what does that mean? Well, it means that if you own a home, typically you bifurcate, you get your own attorney, and then the attorneys come together and say, okay, these are the assets, and we're going to split these assets. Well, typically that means selling the house. That's one of the sad stories about divorce, is that the house gets sold and everybody's got to move, right? Where all the legacy and the kids, the history, and all of that stuff that with the kids is now all gone, right? And now both people are displaced. So what a reverse mortgage can do in a divorce scenario is if the seniors are both 62 and above, or they don't have to both be, but if the spouse that wants to remain in the property is 62 and above, is that a reverse mortgage, okay, would allow them A, to stay in the property. B, if there's a line of credit involved, that line of credit now becomes part of the negotiation with all of the other assets that they have. And the spouse that's remaining in the property could use that line of credit to pay off or to be another bargaining chip or to be another asset that's divided with the departing spouse. So the senior that remains, maybe there was a mortgage payment on the house or maybe there wasn't, but if they qualify for the reverse and they get rid of that mortgage payment and there's a line of credit, right? They can use some of that line of credit as part of the bargaining, which the divorce attorneys like options. They like options. So that spouse that stays in the property, that qualifies for the reverse, now they live in that property. They don't have to make a mortgage payment. They're just responsible for the taxes, the insurance, and the HOA if there's an HOA. So they get to stay, while the departing spouse gets a portion of the equity, or maybe they just renegotiate the assets. Well, you get to keep the house, that's $400,000. So I'm going to take, $200,000 more of the assets, but that's all done through the attorney, right? Of our retirement accounts. Then he goes off or she goes off, and then they buy a house. And they could use a reverse mortgage for purchase, and then they can have a home that doesn't have a mortgage payment on it, and they're responsible for their tax insurance. So the potential for both that are over the age of 62 to have another bargaining chip and another lever in the divorce process, right? While one, if they want to and they qualify, can stay in the property, not have a mortgage payment, pay their tax insurance like they normally would anyway, but they get to stay. So there's a lot of, and most likely that's usually going to be the woman who wants to stay. So it creates options for the divorcing couple that the old option is basically either refinance, which means you're going to have a payment on the property, or I'm just going to sell it, or we're just going to negotiate the full value of the house for the assets, and we're going to do something there. But you're still going to have a mortgage payment if you still had a mortgage payment on the house, whoever retains it, right? And then you're going to have to refinance to get the other person off of that mortgage if they were on it, right? So with the reverse mortgage, you accomplish all that. They get off the mortgage, they get off the title. You retain the property if you're the one that wants to stay and you qualify. You don't have a mortgage payment, and if there's a line of credit, that line of credit then becomes part of the negotiation between the two attorneys and you and your departing spouse. That departing spouse then can go off and maybe they want to buy a house, and if they've got the right and they qualify, they can buy a house using a reverse mortgage for purchase, and they wouldn't have a mortgage payment. So it's kind of a win-win all the way around.
Yeah, if you're at the end of
Right.
your life cycle for working, I'm not sure what that looks like. So, if that's even a possibility. So that's interesting to know that. We as a society said that 65 is when things start, and I know you and I have both read The Longevity Economy. And
Yep.
that goes into how all this came to be. And that's because life expectancy was about 10 years past that. And now we're talking about people living 40 years as what we call as a society senior. We wanted to really isolate real life scenarios that families are facing and to see how this might be an answer to what otherwise, when you're just doing the simple math, that's what I'm going to call it. When you're just doing the simple math on our home's worth this, we owe this is how much it costs to do a transaction in real estate. Once you boil that down and you get your seller net, that proceeds, it doesn't have to be just that. So I hope this has opened up some people's eyes to some options that they didn't even know existed. Yeah.
That's right. And that's why I thought it was so powerful that we did this. And I want to say thanks again, Lisa, for having me on. And this is my first part 2 as well, right? Doing a scenarios based, but I'm going to recommend to anybody else I do a podcast with is that we do a part 2 to talk about outside of eligibility and the myths versus the facts, because that's great for the listener to hear, but it doesn't connect the dots as well. How could I use this?
Exactly. We need real
Right.
life. This is what my family's going through. So most people here, one scenario is going to rise to the top and you're going to be like, oh my gosh, that could be an answer for my parents. Or if you are the person, that could be an option for you as you transition into this next stage of life. The podcast is called Not Ready Yet because the yet equals we don't have enough information. We don't know what we need to know to make a proper decision. And I hope that this maybe helps some people having the conversations, talking things out, getting more information, and having the ability to make a good decision for your family. So That's really
Right.
what this is about, and I think this is huge to know these scenarios and how that really could be a real life help to someone. So, Michael, thank you so much.
I just want to say thanks again for having me on, and hopefully your listeners got benefit out of
Great,
this.
great. And everyone, we are going to have in the show notes how to get a hold of Michael should you have specific questions about what's going on with your family. And so, again, thanks again, Michael, and I will see
Yep,
you
you're
soon.
welcome. Thank you. Okay,
All right,
thank you,
bye-bye.
Lisa.
Thanks for joining me on Not Ready Yet, Curating Conversations for the Aging Journey. If something in this episode gave you clarity or the courage to start an important conversation, or offered a new way to look at things, I hope you'll share it with someone who might need the same encouragement. Remember, navigating aging isn't something we have to do alone or in crisis. With love, logic, and the right tools, we can face what's next with confidence and connection. Be sure to follow or subscribe so you never miss an episode. And if you're feeling generous, leave a review. It helps others find the show. And just a quick note, the information shared on this podcast is for educational and informational purposes only. It is not intended as a substitute for medical, psychiatric, legal, or other professional advice. Always consult a qualified professional for guidance tailored to your unique situation. This is Lisa Harper, and I'll see you in the next episode. Bye for now.